Hello and welcome. You're watching The Money Show, your one-stop destination for all your personal finance queries. I am Kavita Thapliyal and today we are focusing on our viewer queries. That's right, we are going to answer each and every aspect of your financial goal or your financial portfolio that you might need advice on. And today, to answer all of your queries, I have with me Gautam Kalla, who's head super investor, Mira Asset Sher Khan. Gautam, hi, good evening, and welcome to the show. And for all those viewers who've just tuned in, I would like to flash our WhatsApp number and our email ID where you can send across your questions. So you can send across your questions on our WhatsApp number, which is 8657974571. And our email ID is themoneyshow@etnow.tv. We'll be flashing this soon. But then, Gautam, let's begin with our first question, which is via email. And I think this is Suresh's question that we are talking about, and he is from Andhra, and he's been investing since last 3 years, and he's looking to accumulate a corpus of almost 5 CR in 7 years, and he wants you to review his funds and also if this investment is enough or is right for his goal that he's lined up for himself. Okay, let me just get to the details. Okay, so he has Quant ELSS, he's got Quant Small Cap, he's got SBI Balance Advantage, UTI Nifty 50, Tata Digital India, Nippon India Small Cap, Parag Parikh Flexi Cap, and he's also invested in Mira Asset Small Cap 250 Momentum 100 Fund of Fund. That is a 5 lakh lump sum investment he's talking about. Okay, so I do not have him on the phone line. I have no idea about his age group, and I think the fund mix is too huge. You can just cut it down, or maybe you might just want to consolidate his portfolio. Gautam?
Yes. So one thing I'd like to say is that his target of reaching 5 crores in 7 years, if the portfolio grows at 12% CAGR, he will end up at 2.5 CR as opposed to his target of 5. So either he'll have to double his SIP amount, or if he can wait and increase his tenure by another 5 years, then he's looking at a 5 CR corpus. Now, if I talk about his schemes, I would say that there are about 4 schemes that he should continue with, and he should make a few changes in some of the other schemes. So instead of Quant ELSS fund, I would say he should look at DSP Tax Saver Fund. Access Small Cap can be replaced by Bandhan Small Cap. UTI Nifty 50, ICICI Prudential Blue Chip Fund is a good alternative. And finally, I would say look at Bandhan Core Equity Fund, where you can put 10,000 rupees. But other funds, I think you should continue and maybe reduce some allocation there to fund Bandhan Core Equity.
So Gautam, I have a few queries now. Can we just flash the recommendations that Gautam has made on the screen, please? And so you have asked him to exit from Quant ALSS to a DSP tax saver and a small cap change also. You've asked him to move from Axis small cap to a Bandhan small cap. Why the change in the ELSS funds? Any specific reason?
So we track all funds regardless of category, and we look at their performance as well as the risk that they take to deliver that performance. Plus, so this is the quantitative aspect of the research, and then we look at the qualitative aspect in terms of the fund manager pedigree, investment style, stock selection, current portfolio positioning, and basis that we arrive at the funds we like. And that's in that matrix, we find DSP Tax Saver Fund to be a more attractive option right now than Quanti LSS.
All right. And what about the small cap? I mean, what's the change in terms of strategies when it comes to a Bandhan small cap and an Axis small cap? Axis funds are not performing that well. I mean, across categories, we can see an underperformance. But then talking about the fund manager and the fund strategy and the fund mix in terms of exposure, what's so different in small cap of Bandhan?
So what we look at is obviously the mix between small, mid, and large. How the portfolio is currently positioned. So when we look at the sectors, for example, where the sectors are overweight and underweight, so we look at those kind of current portfolio positionings. And in the small cap space, we also look at the model as to where does it put weight on, is it a growth strategy, a value strategy, or a blend? So these are different factors that we consider before arriving at a fund, one fund over another. Access small cap, like you said, many Access AMC funds are underperforming, but we've obviously seen their recent outperformance. They started coming back in performance, but still we prefer Bandhan. There is a change there in terms of fund management at the leadership level. So that is also impacting the performance at Bandhan, and we see a lot of we expect much higher risk-adjusted returns coming from that house.
All right, so that will be all for Suresh. But then I think I have a viewer online connected from Bangalore, Mr. Raghu. Hi, Raghu. Good evening. How are you doing today?
I'm very good, ma'am. I'm regularly watching, as you said earlier, and I benefited a lot from your show. Actually, glad to see
Oh,
that,
that's
and
great.
that's a great.
Oh,
And
lovely to
also,
know.
I want
Congratulations
to
for
tell
that.
you the benefit also what I got now. Actually,
Yeah, yeah,
basically,
yeah.
I
Okay.
invested based on Money Show 7 years before. Regularly, I'm watching more than 7 years Money Show. And
Wow.
based
Okay.
on the recommendation I invested, I made a profit of around 35 lakhs now. So now I am become the senior citizen. Now I need
Okay.
small help actually. I have
Definitely.
PPF account. I am having 63 lakh rupees. And
Okay.
I have a profit of 35 lakh from ICICI Debt and Equity Fund. I want to
Okay.
use that profit of SWP of almost per annum around 5 lakh rupees for 5 years plus. Afterwards,
Okay.
I want to take SWP amount from PPF amount what I am going to invest now actually. That was my plan right now. I need
Okay.
your suggestion actually, expert
Sure.
suggestion. I am the
Sure.
senior
Sure.
citizen, okay?
Sure. Sure. First of
I am
all, thank you
enjoying
so
the
much for
show,
all
that's
your
the reason.
Thank you for your kind words and thank you so much for appreciating us. This really gives us a lot of motivation to do a better show and get better programming for you. And congratulations for the profit also that you've earned over the years. I just want to know the amount that you have accumulated in PPF. Has this been already invested in a balanced advantage or hybrid category, or you want to invest in it?
This coming April, it is maturing. More than that is 25 years
Okay.
old fund
Sure.
actually. And
Sure. Sure.
accumulated fund is 63 lakh rupees right now. That is my,
63 lakhs rupees. Okay.
yes.
So
I
one
am the
very
senior
good thing with
citizen.
you. Yes,
Yeah, ma'am,
which
sorry.
is so great that you being a senior citizen and
Yeah.
you've been an equity investor and now you are well versed with the categories where you'll be comfortable with, and you've clearly mentioned that a balanced advantage or a hybrid category. So hats off to you over here and the kind of understanding you have of equity markets and asset classes across. So let me not just take a lot of time over here and let's connect with Gautam who's going to help you out today. So Gautam, allocating his PPF into a balanced advantage or hybrid because I think that is what he is comfortable with, and a hybrid could be like a conservative hybrid and. Also an SWP that he needs 35,000 per month for 7 years from the amount that he's already accumulated 35 lakhs so far.
Yes. So, Raghu, if I understand you correctly, right now you're looking to withdraw only 35,000 per month out of a 35 lakh corpus. And that corpus is invested in a mix of debt and equity, and you will touch your PPF amount only 5 years later. So, if my understanding is right, your intention is to withdraw the entire amount of your corpus of 35 lakhs in the next sorry, five, not five, 7 years. Is that the intention, or you want to retain that 35 lakhs and ensure that that is protected and that stays that value?
To know when will it reach that perfect value. So, yeah, sorry, Raghu, please carry on.
Yeah. I will tell you. I want to stop after 5 years of ICICI debt and equity, and I want to draw from balance advantage fund, whatever fund the experts are selling.
Okay.
SWP
Okay.
SWP basis of 5% only. I want to draw after 5 years only. I don't want to touch because I am giving enough time to fund manager. Let the fund perform, then I want to withdraw the money.
Great
So,
clarity. Great clarity.
yeah.
Yeah, Gautam.
Yes, yes. So I think the thought process is correct. I think the approach that you're using is correct. Just as a thumb rule, what I would suggest that you keep in mind is whatever your portfolio value in a blend of debt and equity is, if you're expecting a return of let's say 10% a year on that investment, and your SWP is below that, so the lower the rate of your SWP. So annually, if you're withdrawing, let's say 4 lakhs out of a 40 lakh portfolio, that is 10% of your portfolio value. So as long as that rate of withdrawal, the SWP rate is lower than your expected return, then you can expect on a long-term basis for that portfolio to not depreciate or lose its capital. This is a very basic thumb rule, and the more the, let's say, variation in the expected return, the more gap you have to keep between the return as well as the withdrawal rate. So typically we suggest a 4 to 5% withdrawal rate. So your thinking is correct. That is the right approach to take. As long as your expected return continues to be above 10, I think 4 to 5% is a sensible withdrawal rate. And the advantage that you are of your strategy is that you are giving time for the equity markets, which is what we encourage our investors to do every time they invest in equity. So I think the approach is correct.
All right, perfect. Raghu, are you satisfied with the answer? Is there anything else you want to ask Gautam?
Nothing else, ma'am. Suggested fund actually I am taking right now based on your show HDFC Balance Advantage Fund. Is it okay?
Yeah, Gautam?
Yes. So HDFC Balance Advantage,
Okay.
ICICI Prudential Balance Advantage continue to be our top two picks.
Okay.
All right, Raghu, that
Thanks
will
a
be
lot.
all. Thank you so much for asking your question. And let's take a quick break also. And we do have our viewers connected, but then just in case you haven't yet noted down our WhatsApp number and our email ID, you can do that now. Send across your questions with all your financial and investment details, and we'll get it answered by our experts live. Hi, welcome back. You're watching The Money Show, and I have with me Gautam Kalla, who is doing your life financial planning on the show today, and I'm joined by our viewer from Hyderabad, Krishna Teja. Hi, Krishna. Good evening. How are you doing today?
Yeah, hi, I'm doing good, thank you. How about you?
Doing good, thank you. Thank you so much for sending us your question, Krishna. Okay, so I believe you have a retirement goal, and post 20 years, you want to accumulate certain amount. Is it 10 CR?
Yes, that's correct.
Okay. All right. I have your funds details, but I just want to understand, have you derived to this particular corpus with all the calculations which are needed to be done for your retirement corpus? Or are we talking about inflation not being counted in, or any financial liability that you might have on you?
Yeah, I just did not calculate exactly, but I just had this figure in mind, keeping in mind my future requirements like my
Sure.
kids' education and marriage and so on.
Okay.
Yeah,
Okay. So kids' education and your
I have two
retirement
kids.
and okay.
Yeah,
And you would be
so
needing amount for their education after how many years?
yeah, it would be after 12 years
Okay.
for
And
one
what's the
kid
amount that
and
you're looking
15 years.
at? Okay. Okay. So what's the amount are we looking at?
No, for the education part, I did not exactly calculate.
Okay. 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 All right. So let's just keep it as 10 CR, and maybe Gautam will help you
Mhm.
break that thing down because it's good if you go in a very goal-based manner. I'll just read out the funds, and you can tell me if is there anything you've added now. So you've got Quant Flexi Cap, Nippon Multi Cap, you've got a Kotak Multi Cap as well. Motilal Multi Cap, HDFC Mid Cap, Motilal Nifty 500, Momentum 50 Index, Quant Mid Cap, Tata Nifty Mid Cap 150 Momentum 50 Index, Nippon Small Cap, Tata Small Cap, and Quant Small Cap. Um, do you have a financial advisor or planner, or you've just done your homework and got these funds in your portfolio?
Yeah, I did my homework. I don't have a financial planner.
Any specific reason for selecting the funds that you have selected? Were you just looking at return and the new kind of trend that's going on in the market?
Yeah, these index funds I recently added last year, 6 months
Mm-hmm.
back. But
Okay.
few funds I'm
And
holding since a very long time, like HDFC Mid Cap and Nippon India Small Cap. I have been holding since past 7 to 8 years for now.
okay. Why two multi-cap? You've got a Nippon mid-cap, multi-cap and a Kotak multi-cap also.
Yeah. So since my SIP amount is like 15,000, 20,000, so I just don't want to put all my SIP for the allocation for the multi-cap in same fund. So I just thought of splitting it up
Okay,
into 2 or 3 fund houses.
sure. All right, so let's just help you consolidate your portfolio, because right now we are seeing a lot of diversification and repetition of investments also. So Gautam, how do we streamline this in terms of categories? Let's just sort it out first. Ideally, at his age and looking at the kind of goals he has, which is child education and his retirement, although he's not factored in inflation, that one might need to factor in for education, and then retirement, one need to count down their expenses, liabilities. So there is a huge amount of homework that needs to be done. I think you need to break down that as well for Krishna. But having said that, how do we streamline his fund mix as per market caps?
Yes. So, interesting points raised by you, Kavita, that while, 20-year time horizon is a good, very long time period, and that's why 10 crore is also a good number to target. But obviously, in 20 years, a lot of things change, the market changes, and your life stage changes, and there are other demands on your money. So it's very important to consider, the temptation that you probably need the money for something else than, let's say, your retirement that you've not considered yet. So it's important to consider. Having said that, I think it's a complicated problem to solve, financial planning, and that's probably why we need advisors. So let me just first try and address Krishna's problem that he's put to us, which is, can he create a corpus of 10 crore within a 20-year time frame? And if this portfolio of 1,40,000 grows at 12% a year with the SIP continuing, you are looking at a 14 crore corpus. So that is what you're targeting. So you will be able to achieve this. Just if you can do that, instead of 14, if you in fact increase, if you top up your SIP by 7% year on year, then you can even reach 20 CR. So really, that's the part of compounding and the amount of time that you give to your portfolio to grow. So I think if you are able to take out funds separately for your child's education and start a separate portfolio for that, that will be a good time now to start that, so that this portfolio goes undisturbed and you're able to meet your target. If I come to your funds, definitely there is a less bias towards large cap, and we've been telling our clients last 1 year to have a large cap bias portfolio. So those are some of the things that I would like to change in the portfolio. So let me just go fund by fund and suggest what you should do. So Quant FlexiCap Fund, you've got a amount of 10,000. You should replace that with HDFC FlexiCap Fund with the same amount. Nippon Multicap Fund, please continue. Kotak Multicap Fund, please increase from 10,000 to 20,000. Motilal Nifty 500 Momentum 50 Index, you can look to replace this with ICICI Prudential Blue Chip Fund. Motilal Multicap Fund, you should continue with the same amount. HDFC Midcap Opportunity, in fact, you can increase from 12,500 to 20,000. Quant Midcap Fund of 12,500, you can replace with Kotak Blue Chip Fund. You can see that I'm adding more to large cap here. So put in 10,000 Kotak Blue Chip Fund. Tata Nifty Midcap 150 Momentum Fund, please continue that index fund at 10,000 per month.
Right.
Nippon Small Cap Fund of 15,000, please
Right.
increase that to 20. While the other two
Okay.
funds, Tata Small Cap and Quant Small Cap, please discontinue.
All right, so a lot of changes that Krishna really need to implement as far as portfolio is concerned, and he might also just want to go back to his workboard and figure out his financial goals and the corpus that he wants to accumulate. But then with that, it's time up on the show today. Thank you so much, Gautam, for taking time out and helping our viewers with their financial portfolios. And for all our viewers, thank you so much for watching, and I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.